first module of this strategy, and we'll be talking about channeling the higher time frame, which is the weekly and the daily. So this is the major higher time frame we'll be using for this strategy, and I'll be teaching you basically how to channel this higher time frame so as to know the direction of price. So this is the weekly, like I said, and let's start from the previous channel. As you can see, when channeling the higher time frame, we make use of the most recent touches. You don't go to last 5 years or whatsoever just to draw a trend line. You trade the most recent touches on that time frame you're in. And here you can see that the recent touch here is this, and this. So let's go to draw. You tap here, you connect it down here. That's the first trend line. Then you can clone it. Although it is good to note that most of the time, these lines are not directly parallel. Well, it can't just be one touch, so yeah, it was 3 touches actually. So as you can see, this is the recent touch on the weekly time frame, and you clone it and you drag and drop it here. Like I said, the lines are not always perfectly parallel, but it is good to know that if it looks like it, you have to trade it. So this was the first touch. The second touch, yes, the second touch, and this is the third touch. And this is how you can channel your higher time frame. Then let me show you another. This was the most recent touches on this time frame. The other I just did was the previous, and this is the most recent, where price did a double top and dropped. You clone it, and when you come here, you see that it's almost right there, and price respected that zone. Price drops down to that zone. Make sure when drawing your trend line, you draw it at the wick. We do not cut through the body of price. We draw it at the wick. This is it. This is just how to channel your trend line, to channel the higher time frame, as easy as this. So after then, I have shared with you how to channel your higher time frame, and same is applicable to the daily. When you go to the daily, you would see same things, and it is applicable. The same thing I just did is applicable. You'd see entries too by channeling this higher time frame. Swing entries. You can take this trade from here, I think. Okay, here. And you clone it. You see the second touch? See when price pumped? That was during the election period. And price, the inauguration price. the election, sorry, price pumped. So let's clear this and move over to the next slide. Let's go over to the next slide. So the first step is analysis across major time frame. So what are the things to know or be aware of analyzing across this major time frame, the weekly and the daily? So the first thing is knowing the overall outlook of the market on the weekly and daily. That is the major reason why we are channeling the higher time frame to know the overall outlook. What direction is price going to? What is the current momentum in the market? Who is winning, the bulls or the bears? That's the first reason why we need to do this analysis across the major time frame. So the secondly is to know either price, is it consolidating or is it now in the directional move, or is price correcting or impulsing? Because it's either price is correcting or impulsing. Yeah, most times during correction price is consolidating too. So that is why we do this during our analysis across this major time frame. You know what phase the market is in, what phase. Currently now the price is bearing, so it is impulsing, it impulsed. If you check the daily time frame, you see that there was likely a correction before this impulsive move, and that is it. As you can see, price corrected here and it gave this impulsive move. So that is it for that. After you do your major analysis on your major time frame, you'll be able to know the phase the market is at, either correcting or impulsing or consolidating, or is it in the directional moment. So the third one is spotting swing opportunities on this higher time frame. Yeah, that's a good thing about trading this higher time frame, because it's going to give you a long-term perspective of the market, at least for weeks, months. Yeah, so with the weekly time frame you'll be able to figure out sweet swing opportunity. Like, let's say this was the double top price formed here. This is the most recent touches on this time frame. Now, and what are you expecting of price? And also, this is a psychological level. 45 psychological level is a price where traders believe that the market is going to react at that price. Most times it's ending with zeros or 500s. It's mostly ending with zeros. That's a psychological zone. So price respected the zone. Yeah, price respected this zone. 1, 2, double top. And then if you go down to the daily, you'd see that on the daily time frame price also corrected. Price corrected. What did it do? It created a symmetrical triangle. Let me outline it for you. So this was a symmetrical triangle price outlined. Price created after creating the double top, giving you an assurance that is about to give an impulsive move, and price did that. So let's say you saw the double top in correlation with the psychological level, and then you saw this symmetrical triangle. That is 3 confirmations of this trade. You took your sell. You can either take the sell while in the pattern, and this is going to be your take profit, the last low, and your stop loss is going to be this previous high plus extra 20 points at least. Let's just put it here. This was a clear 1:5 risk to reward ratio of this trade if you entered while inside the pattern. So if you wanted to have a clear confirmation and be sure of the direction of this trade, you want to be sure, you can wait after an impulsive move, and when the market gives a retracement, mostly on the lower time frame, it will give you a retracement. You can take in sell to join the trade. As you can see, price retraced from this week of this daily candle. You can take a sell here, and this would be your take profit here. This zone would be your take profit here, and then your stop loss is going to be the same place. Stop loss 20 points is okay. So this could have given you a 1:2.5 risk to reward ratio. And if you notice, these trades have 0 to no drawdown. This is how good pattern trading can be, trading trend line in correlation with all this confirmation I'm about to share with you. So you're going to earn good profits as long as you practice, because practice makes perfection. So that's that about being able to spot swing opportunities on higher time frame. Also, there was a swing trade that occurred during January 2025 on this pair Dow Jones. Let's see it together. On the weekly time frame, that was an amazing trade. This is it, and you would see that the market did 3 touches. Yeah, this was it. You see, remember always to draw your trend line at the week of price. So the market did 3 touch. This was the 3rd touch, which occurred in January, as you can see. And this is, let's clone. This is it. This is it. This is price. This price. Price is either, I say it again and again, price is either correcting or impulsing. That's why we need the higher time frame. So price did an impulsive move, corrected, impulsed, corrected, and this was a clear buy trade on the weekly time frame. And let's say you needed an extra confirmation to take this trade, you can go down to the lower time frame, but this 3 touch on inside the channel is a clear buy trade. Let's go to our daily time frame, and let's see what price did here, how it rejected that zone and reversed on our trend line. Always respect what you see. Always. So price, this was the trade. Price dropped and did a 3rd touch on our trend line and bought. Clear buy. And if you needed an extra confirmation for this trade, you can go to our lower time frame on H4, which I'll take you to on our next tip. So the next tip is, can be 2 or 3 touches on higher time frame, the market is not perfect. Yeah, that's true, especially why you can take trades with 2 touches. If it happens on a higher time frame like the weekly, it has higher chances of playing out, because on the lower time frame it can be more than 2 touches already. You get what I mean? So let's see this double top that occurred here on the weekly time frame. This is it, right? 1, 2, did a double top. Now go to the daily. You would recognize something. Price reacted to that zone more than once. 1, 2, 3. So it wasn't just a double top, it was a double top on the weekly, but on the lower time frame, you see that price reacted to that place. That's why trading the higher time frame or knowing the direction of the market on the higher time frame is very much important. And if you check these places where it looks like just one candle touching the line, when you go to the lower time frame, you'll realize that price respected that zone in a grand style. Watch price, what price did. Price is always respecting a zone and giving is the retrace candle. Price is always respecting a zone and giving you extra confirmation. So always pay attention to what you see and what the market is doing. Pay attention to what the market is doing. This is it. This was it on the daily time frame. On the third touch, a clear third touch with a nice retrace reverse candle. So we go over to the market is not perfect. That's just it. The more you go, you realize that if you're waiting for the perfect setup as you have it in your brain, you may lose out on really nice opportunities. So trade what you see. If it looks exactly like it, you can execute. Now I'll be telling you why the reasons why you need to analyze on the higher time frame. Yeah, like an intraday trader would ask, an intraday trader, why should I analyze on the higher time frame when I can easily just go to the H4 to take my trades and execute and jump out of the market? Well, the reason why you need to analyze on the higher time frame, this is to let you see and be aware of the overall direction of price. That is the reason why you need to analyze the higher time frame. You need to be aware, even if you're an intraday trader or day trader, you need to be aware, because price, you can be trading on the lower time frame and you would see a certain price movement and you would see that the overall general direction on the higher time frame is taking control. It happens a lot and it happens, and I'll show you an example here on the chart. So this is to enable you know where price is heading to. Is the price bullish? Is it bearish? Is it correcting or is it impulsing? Now let me give you an example of why you need to channel the higher time frame before taking your intraday trades as a day trader if you're one. And this is it. This was the, remember, we bought, corrected. Now if you look closely, before this buy started on the daily time frame, let's go to our daily time frame. I'll show you something that happened, and only someone who analyzed the higher time frame would notice why price reversed immediately. So this was it on the higher time frame. On the daily chart, we all knew that this was a buy, a third touch, a clear buy coming in. So why I know some traders were selling on H4. Now let me show you. H4 give a sell trade, sure. Let's go to H4. This was it on H4. Price got here, and then if you see, that was a falling wedge. This is a falling wedge that happened on H4. Let me make it clear to you. Price gave a falling wedge. So from this zone, you'd see that price gave a falling wedge, and this was it. This was it clearly here. Watch. You'd see this is called a falling wedge. As it's called a wedge because the more it goes, the more it tightens. And one, this was it. Two touch, and it boomed up, right? Now on the H4 time frame, if you zoom in correctly, you see that this was a sell. Yes, like you can take the sell trade, yes, but because you did an analysis on the higher time frame, you are aware the price is about to pump because the daily, the weekly is giving you a bullish setup. But the H4 had a sell, yes, and you have to respect it if you're a day trader. So now this is even another confirmation for the buy setup on the higher time frame. This candlestick, this is a retrace candle, a retrace candle, these candles are retrace candle. Now let's say you took this sell trade, that should be where your stop loss is, just above the previous high, extra 20 points is okay. And then I'm sure most traders would want their take profit to be at this trend line. Just touch it. I'm sure maybe we're anticipating a touch before the bullish momentum started that much. But guess what price did? Price did only 50%. See what price did here? Price dropped. Did 50% and reversed. Watch. Did 1:2 against 1:4, right? Now, most day traders will ask themselves, why did price just look at this candle that came up? That's the latest. You ask yourself, why did price just boom, boom, boom everywhere? Because it's respecting a higher power. The higher time frame is calling a buy. So if you're just trading the H4 time frame and you're not aware of the higher time frame, or you disrespect it, there are certain movements that you may get caught up in, like this sell. If you're aware that the price on the higher time frame is giving a buy, you can know that okay, it's time up, and signaling a buy. Now go to the daily time frame, you'll find out that that was just a week that we were selling. Watch. Trading is amazing. This was just a week that was sold. Watch. This place, this candle, this candle. This was the week that was sold on H4. But then you expected it to drop, but it didn't because it was already time to buy. There was already a third touch. Okay, now this buy trade had about 3 confirmation. On the weekly it was a dot touch, on the daily it was a falling wedge, tightening falling wedge, and well, after a tightening falling wedge, it's a reversal pattern, which I'll teach you more about it the more we go. Now the price was giving about 2 patterns already: third touch, falling wedge, and then when we went to H4, you'll find out that it also gave a candlestick confirmation. It gave a retrace candle, a clear retrace candle on this third touch. I mean, I don't think there's anything that can stop the market from buying after this 3 nice confirmation. I mean, there's nothing, because this is another confirmation. This was a clear retrace candle. Yeah, that was a retrace candle. Which then, if you watch what price did here, when price broke out of this wedge, it's tightened. This is called a continuation pattern. This was a flat continuation, bull flag. After tightening, CPI came, we bought, it pumped, price pumped, and you'll find out that in between there were still other continuation patterns which gave more entries for traders. Okay, so now all I'm saying is respect what the market is doing, respect what you see, because when there's about 3 confirmation in a trade, you can't stop price from doing what it's about to do. So this was it, and market did Price did awesome that day, and that swing trade was for about some weeks in the month of January. That was a good trade. That was a good trade. Well, that is the reason why you need to trade and know about what is happening on the higher time frame. Even as an intraday trader, you need to be aware. This is not going to temper with your day analysis, but it's going to make you more efficient in trading. So that will be all for now, and I believe you have been able to know how to channel the higher time frame and analyzing across other time frame too. So that's all for now, and I'll see you in the next model. Really awesome doing this with you.